Some companies promise the world. But what happens when things don't go as planned? When it comes to your money, understanding the level of guarantee is not just important, it's essential. This is especially true for a company like Younited Credit, which operates in both lending and investing. The level of guarantee they offer isn't a one-size-fits-all answer because it depends entirely on the product you're using. Let's break it down. If you have a term account with Younited, your investment is guaranteed in both capital and interest. This is a very secure option. In addition, these accounts are also eligible for the Deposit and Resolution Guarantee Fund, which protects your savings up to €100,000. That's a significant layer of security, giving you peace of mind that your funds are protected by a well-established system. However, if you're an investor in one of their securitization mutual fund units, or FCTs, the situation is different. This investment is not guaranteed in capital or interest. The performance of this product is tied directly to the repayment of the loans within the fund. This means there's a risk of partial or even total loss of your initial investment. So, why would anyone choose a non-guaranteed product? Because higher risk often comes with the potential for higher returns. And Younited Credit has put strict risk management measures in place to mitigate that risk. They have a rigorous borrower selection process, with only a small percentage of loan applications being approved. They also have a strict policy for collecting on unpaid debts and a pooling system that distributes any outstanding payments across all investors. These measures help to ensure the quality of the loans and, as a result, the yield of the investment product. The level of guarantee with Younited Credit depends on whether you are a saver with a term account or an investor in their mutual funds. It's a fundamental difference you need to understand.